Morning, Ricardo. Thanks for being with us today. Rather than me introduce you, probably easier that I ask you to do it. Just give us a bit of background.
Morning, Mark. So in terms of, I'm Ricardo. I work with a company called Foresight Group, which is a leading infrastructure and private equity manager. So we basically focus on sustainability-led strategies for our investors. We manage more than 300 infrastructure projects globally, and we've been around for more than 35 years, focusing on those areas. I'm a partner in the business. I run a solar-listed fund that acquires assets in the UK and internationally, and I've been with the company for more than 10 years now.
Fantastic. And I should say congratulations on the successful IPO.
Oh, thank you very much.
Keeping a close eye on the share price. I wanted to have a wide-ranging conversation with you this morning, which we'll try and get through in a reasonable amount of time, but we're actually filming this in the week where gas prices, they've been going nuts for a while, but we've had half a dozen energy firms of the smaller challengers go under. The government has had to prop up a fertiliser business just so we can continue producing CO2. What's your take on how we got here and probably what the knock-on is into your world for that?
It's definitely good timing to be talking about power prices. It's really been a perfect storm over the last few weeks, potentially even months. I mean, gas prices are critical because it specifies the price of electricity in the UK, because it's the marginal consumption facility that you use to generate electricity. What we're having at the moment is a combination of factors, but predominantly is the fact that gas prices globally are relatively high because of the demand we're seeing. There's two elements in Europe as well to consider. So one, gas prices are extremely high at the moment, but two, we had cold winters last year as well. That meant that the actual reserves of gas were depleted. Usually what happens is that you deplete your reserves over winter, you ramp them back up over summer. And in this point in time, it's extremely expensive to do so. And that's why there's so many concerns at the moment in terms of what will happen with gas price over the next few months and where are we exactly in terms of the availability of gas. But if you look at the UK more specifically, there are other issues as well that have been impacting the prices that we're seeing at the moment, which is one, the UK has been relying more and more on renewables. So it's been a significant investment over the years. We have a significant amount of onshore and offshore wind at the moment, solar, biomass projects. But wind specifically is becoming quite relevant from a generation perspective. We have been having various months of low wind speeds, and that is affecting the amount of electricity available on the grid. Mm-hmm. So that's not helping. In addition, if you look at the generation mix in the UK, we also rely on interconnectors with Europe. So that's pretty much these cables that you have lying under the sea that allow us to connect the UK to various European countries. We have some with France, for example. France tends to be an exporter of electricity. They still have a significant amount of nuclear capacity in the country, and it's not unusual to see us buying electricity from France. Recently, we had a fire in one of those cables, and that is causing a bit of an impact as well. So to give you an idea, you have around 110 gigawatts of capacity installed in the UK, including the interconnectors capacity. This only represents, this interconnector, you lost around 1 gigawatt, so less than 1%. However, the margins are tight, and when the margins are tight, any change to the supply of electricity can cause a big volatility on prices. So, but again, overall, the key issue is still gas and availability of gas. This can become politically very quickly in terms of where we get our gas from and the countries that are involved in those discussions. But the reality is that this is not something that will go away over the next few weeks. This is something that we think this period of high power prices will last for a year, maybe two, potentially even longer. So we're not saying we're going to see the current very high spot prices in the market, but this period of relevant high prices compared to historical averages will remain in the longer term. What does that mean for us renewable generators? It's positive. Obviously, as an economy, it's creating a lot of issues from a end consumer perspective, from an industrial perspective. From a renewable perspective, it is beneficial to have higher power prices. However, it's important to mention that our revenue streams don't rely only on electricity sales on a merchant basis. Most of these projects have subsidies in place that were available to actually build the assets in the first place. We also tend to hedge our power price exposure on a regular basis. So, for example, if you use the fund that I manage as an example, of the expected annual revenues we have for this year, only around 25% actually linked to spot prices.
Right.
So that's the exposure we have at the moment. But obviously, it's an interesting period that we have at the moment. We haven't seen these sort of prices probably more than 10 years in the UK. It's creating a lot of challenges. So let's see how the market evolves. But again, from our perspective, this will be is not a week or two. This will be a longer period of higher gas prices in the market.